In this video, we're going to go over how to use the whole MA, which is the whole moving average, inside of our ultimate trend following strategy. And first thing we're going to do, once we add it to our chart, we're going to click on the gear up here for settings. And by default, it'll have some different settings than I have right now. So what I'm going to do, since I'm going to show by example what to do here, I'm going to just reset defaults. That way we start from scratch. You can either use settings that come default, or you can use your own settings and try different things if you like. So we're going to just set everything to default and start from scratch. Now, first thing I like to do, you'll look at the chart and you'll see that the trend is a little difficult to see, the green uptrend and the red downtrend. So I like to actually make that a little more visible. And I go to the style, and here on this plot, you can see that it takes it off or on the chart, and it's on by default, but I like to actually change the colors and the thickness. So this green uptrend, I like to make a bright green, and I like to thicken it up quite a bit. So now it's a lot more visible on the chart. The red, I make it a bright red, and I also thicken that up. And you'll see how it's a lot more visible on the chart, and this is just how I like it, but you can play with it however you like. You can change your colors here, change the thickness of the lines, you can change how it displays on the chart, all kinds of different ways of seeing trend. Area is kind of cool too, really easy to see, but choose what you like. I'm going to just have lines for now, and I like to also go to the properties and tweak the initial capital. You can put whatever you're starting with here, whatever you'd like to use. Say you're using $100,000. You can have this on default or just change it to whatever your currency is. I'm going to use USD because I'm in the United States. Now, if you're using a fixed order size every time, you can put that in here. So if you have 100,000 and say you're using 50,000 in each trade, put that in there. Or I like the position size. So let's say you're using a percentage of your equity instead of a set contract. Let's say you use, just for example, 100% of your equity every time. You can do that also. Pyramiding doesn't apply to this strategy, so we can just put that on 0. I'm going to use a nice conservative commission. I'm going to also factor my slippage in there. I'll put 0.3 for a market order. Every time I'm a taker on the buy or the sell side. And we don't have to really mess with these. We'll have the strategy recalculate on every tick. Okay, now we're actually ready to go into the strategy settings. And the first thing in the inputs is just defining the time period that you're looking for trades in. Right now we're on the Tesla chart on the daily. I believe Tradingview goes back to, let me zoom in as far as I can. It's a little bit after 2010. So let's say I wanted to look for trades, just for example, between 2012 and 2016. I can do that very simply by changing those time periods in there. Now you can see it's not looking anything before or anything after. For our example though, I'm just going to go back to 2010, and I'm going to set some date far in the future, so this will just keep updating real time as it keeps painting and new information comes in. Okay, now we're going to just go over the whole moving average. So if you don't have it selected, just click on the drop down, click whole moving average. First thing we're going to do is just set our period length, and that's going to detect how long or how short of a trend is that we're looking for. Right now the default is 35. If you wanted to make that longer, let's say 350, you're going to see back here how it'll change. Now it's a much longer trend for the longs and then for the shorts also. You can actually go up to 49.99 to the max. That's just a Tradingview limitation, but That's the max time frame. So what this means, if we're on a daily chart, we're looking back 350 daily bars for the trend, and the current trend we're in is 350 daily bars. If you change to an hour time frame, it's 350 hours now. So depending on the time frame you're in is going to affect your look back period. Higher number for greater trend, for a longer trend, shorter number for shorter trends. Okay, these next settings here, SROC, these are for the standard rate of change. They do not apply to whole moving average, so it doesn't matter what you do here. But there's no need to do anything with these because they don't do anything anyways for whole moving average. They're only for using the standard rate of change as your indicator. But again, we're using whole moving average for now in this example. Same thing for Connor's RSI. These will only affect the Connor's RSI if that's your trigger indicator. Since we're using whole moving average, these will not do anything right now. Same thing with this exit position on Connor's RSI signal. That's only for the Connor's RSI. Market regimes, if you mess with these, they will filter out trades. I have a whole video just on market regimes. That's a deep dive into it. So I won't go into that here nor mess with them. What I am going to do, though, is just set these to very, very basic default, so we're not using them right now. We'll change this here. And now they won't affect anything that we're doing with trading. But again, we do have a full video just on market regimes, how to use them. Okay, next thing is entries. So the way that the whole moving average works in the strategy by default is when you have a new trend. So here we had a green uptrend, we have a red downtrend, now we have a new green uptrend. So as soon as the previous trend ends, the first candle or bar close into your new trend is when the strategy will enter. So you can see that here we had a red, turn green, this bar closed, here's our entry. Now, with the entries, you can delay entries. So let's say you want to enter not on the first candle, but maybe 5 candles later. You can do that. You can see it got moved over. So you want to move 100 candles later, you can do that. That was too far because we don't have that many candles yet. There's 50 candles into the trade. Now, why would we want to do that? Let's take a look at an example. Okay, so we're going to set this back to 0. And let's say we're on a shorter time period, maybe 15. Okay, there we go. We got some nice trades now. In moving average systems, you get a thing that's called whipsaws, where price goes up, down, up, down, up, down. There's really no trend, and those can really eat into your profits. So we can delay entry and theoretically avoid much of those. So let me show you by example here. Let's say I have this setting on with period length of 15 for a short trend. And let's say I want to enter after 10 candles. This is an example. You'll see a lot of these actually got filtered out. We're not entering or exiting into them. We're not getting whipsawed in and out. But we had a nice entry here and a nice exit here. Whereas if I didn't have the enter after 15 candles, I'm sorry, 10 candles, you'll see every time it turns red, we enter short, and it kind of whipsaws out of trades. So this can be very valuable for eliminating whipsaws. Now, another thing we have is re-enter the trade. Now, what does that mean? I'll come back to this in a little bit, but we do have stop loss we can set. We can also have take profits we can set. And if we have those set, and let's say, for example, let me set a longer trend period. This will show it a little more clearly. Let's go back to maybe a 350. So here we have a long trend period. Now let's say I enter here and then I get stopped out right here. Or let's say I have a take profit right here. It could be either of those, a stop or a profit. Now you can see that we're still trending up. But if I got stopped out or take profit, how would I get back in the trade? Well, that's where a re-enter trade comes in. So if you get stopped out, you can literally re-enter the trade automatically. I'll just show you a quick example of how that works. So let's say we do have a stop loss on. Let's show it with the stop loss. We're going to show the stop loss on the chart. That's what this button's for. And let's say we have a stop loss, just for example, 10% underneath our entry. Okay, you can see a stop loss just popped up on the chart here, and this blue line's our stop loss. I actually like to change the style setting of that to make it look different. The second one from the bottom, this plot is actually your stop loss. So I like to make it a darker maroon almost. Just a personal preference. I've been doing it for a long time. Okay. So back to the actual chart. So we now have a stop loss. Now, let's say we want to trail the stop loss as price is going up. We would keep this selected, so we're using stop loss. We click show stop level to add it to the chart first of all, so you can see it visually. And now we're using a 10% stop loss from the entry. Now we're also going to use a trailing stop of 15%. You'll see now that your trailing stop is actually trailing price as price moves up, and we actually exit the trade here. Very good way to exit the trade. And we got stopped out on a trailing stop. Now, what if we wanted to re-enter the trade because we have a little bit left? That's where we'll go back to this. With re-enter the trade, we can actually re-enter over here. And let's say we want to re-enter after 10 candles. There we go. So now we exited for the first time. We re-entered the trade. We have that 10% stop loss here, and now we trailed it again, and then we exit our trade over here. So now you see how that works with re-entering the trade. You also have the ability to trade both directions. If you want to just take longs, you can just take longs. Now we're not trading any shorts, just longs only. If you want to trade shorts only, you can do that too. Now we're just taking shorts. And if you want to trade both directions at the same time, based on the whole moving average, you can choose both. Now more about the stop losses. So I already showed you how a basic 10% stop loss works. You also have the ability to use ticks or pips. Maybe you trade stocks or maybe Forex that use pips. You can use that instead of percent. You also have the ability to, and I'll show you this visually, you could use the previous higher low of the previous candle as your stop loss basis. So let's actually zoom in a little more and you can see that. Okay, so now we're zoomed in a little bit, zoom in a little more. And we're going to go back to our stop loss here. So if I have it on entry, our stop loss is 10% underneath the entry. If I use previous higher low, it's going to use this candle over here to measure the stop loss. Now, both closes had to actually are kind of close, so this is kind of a bad example. But if this candle, say, closed down here, then your stop loss would actually be 10% beneath that. The other thing you can do is use previous trend higher low. Let me show you how that works. Let me actually, before I do that, zoom back out. Okay. So now let's go back to our stop loss. So we have the entry, the previous higher low. Now, what if I want to use this previous trend, the red trend, and the lowest that it went as my stop loss? Because theoretically, if this was a previous trend and we're entering into a new trend, we probably won't go beneath this probabilistically. So we can actually use that as a stop loss. We can use previous trend higher low. And now we're 10% underneath this low right here. Down here is our new stop loss. And that's how that works. What you can actually do with that one, though, is set that at 0%. And that's the exact low point of the previous trend if you have it at 0. So that's how these three different options work. Another option you can use is a Connors RSI as your stop loss. I won't go into how the Connors RSI works. You can look at that on YouTube or read an article. We have some information also on our site in our tutorial about how the Connors RSI works. But if you want to use the Connors RSI as a stop, you can use its oversold or its overbought level as your stop loss if you want to use that. And you would just select it and then select one of these. As a note, you can use both of these together actually. So if you want to use a stop loss, say you have 10% underneath your entry, or you also want to exit as a stop if Connors RSI, if you're in a long, goes below 1, whatever comes first will be the first trigger for you to get stopped out. So you can use both together actually, or you could use one or the other. Very cool stuff. Now, if you don't want to use a fixed percent, if you want to use average true range as a stop loss, you can do that also. You would just set your look back period, what you want to use, and then your multiple. And your multiple can be in fractions or decimals rather to the 100%. Excuse me, not the multiple. I meant the initial stop value over here. This can be decimal. So that way you don't have to use a fixed 1%. You can do 1.2, whatever you want. Now, if you're using ATR stop loss, you can't use regular stop loss. It wouldn't logically make sense. You use one or the other. You use either a fixed stop loss or an ATR stop loss. So you use one or the other. But you can't use both. ATR stop loss can work with Connors RSI at the same time, just like Connors RSI can work with a fixed stop loss at the same time. These options are if you want to move your stop loss to break even and place your initial stop at break even. That way, as soon as you get into profit, let me show you here. Let me actually have a stop loss on the screen. Make the stop loss a little higher. Oop. Just deleted that from the chart. Sorry about that. Okay. Okay, I'm sorry about that. It happens sometimes. Okay, stop. Really sorry about that. Okay, we're using the whole MA. Okay, now we can go back to where we were at before. Let me change the market regimes to basic numbers that won't interfere with what we're doing for now. This is all good practice too. You can kind of see how it works. Okay. There we go. Now we have a long over here. I'm going to go back and change my style again. Make my stop loss thick red. Okay, so here we are. Yeah, don't hit the delete button like I did on accident. That takes it off the chart. Okay, so now let's go back to the stop loss. And we want to move stop to break even. As soon as we get into profit, we can do that. So as soon as we got into profit, we move the stop loss to break even. And then you could even trail it from there if you like. But that's what that's for. This initial stop at break even is deprecated, so don't use it. Just use the move stop to break even if you want to use that option. And you can also use that with ATR stop loss instead of the regular stop loss if you want. So that's how those work. Trailing stop we went over, you can use percent, you can use ticks or pips also. You can set that any number you want. If you don't want to use a fixed percent, you want to maybe use an average true range as your stop loss. You can also do that. That showed be very nice. Very good. So that's how those settings work. Okay, we'll take stop loss off for now. We'll show the stop level. Now we'll go to take profits. These first settings, let's say you want to, okay, we have Bollinger Bands or Keltner channels. And what you can do with these, if you select take profit indicator, is that as soon as you have a trade and you exit one of these Bollinger Bands or Keltner channels, that'll be your take profit. You'll just exit the trade immediately. You can change your settings for the indicators if you want to make them larger. You can also change your look back period here. So this can be a very dynamic way of trading. If you want to use the Bollinger Bands or Keltner channels to take profits. If you also want to, let's say you want to use a fixed percentage from entry. Let's say just exit me if I get 10% of the profit out. There we go, we exited right there. Now, whether you want to use the Keltner channel or Bollinger Bands or the use percentage from entry, you have to make sure that you have use take profit selected. So that's always a requirement. And if you select that, this will now be using the Keltner channel as an exit. And if you want to exit with the take profit, you just got to have use take profit selected. You can actually even use both at the same time if you want. If you want to have Keltner channels or the take profit, whichever happens first, you can have that. Okay, so those are those settings. You can also use an average true range take profit if you want. If you don't want to use a set percentage. You can also use a Connor's RSI take profit if you don't want to use any of those. You can also use the Connor's RSI with the percentage from entry or the Keltner channel. You can use any combination of these three together, and it's going to exit the first trigger, whichever comes first. But you can use them all separately also. So that's how your take profit indicators work. So now if we combine these with the stop loss, we can have, let's say maybe a 10% stop loss. Let's have a 15% trailing stop loss. And we can set take profit. And maybe we can do a 50% from entry. This exit us from the trade if we don't get stopped out. And we can see here that our stop loss was set to 10%, sort of trailing, and we actually reached 50%, so we're out of the trade right now. It's a very simple way to use this, but very powerful at the same time. Now, if you want to filter your entries, You can do that. We have a long entry, and we actually have two long entry filters. You could use one as a fast and maybe one as a slow. We have two short entry filters, same thing. One is a fast, one is a slow. Your options for the short entry and the long entry are the same. And what you're able to do is, first of all, you need to select it that you want to use it. And then you can use either or of these two options. You can use RSI or stochastics or both at the same time to filter your entries. So say you want to only enter longs if your RSI is above 50 on a look back period of 20. You can now filter out your longs for that only. And same thing with the stochastics. Oh, by the way, you could use above or below. So you can also say that if RSI is below 20 and 50, then I don't want to enter the trade. And now you can see that we actually filtered that out. It wasn't a good filter, but you can filter it nonetheless. So you need to experiment with what's going to work for your trading system. Same thing with stochastics. So you can filter your longs on stochastics, or you can use both together. Or you can also use exponential moving average as a filter. So if you only want to take trades, say only if it's above the 21 EMA, you only want to take longs above the 21 EMA, we can do that. For whatever other setting, maybe a longer term, maybe only above the 200 EMA, you can take trades only. And you'll see here how that can affect your strategy. You can do above or below. Be a good idea maybe to use above for your longs, and you can also, on your shorts, maybe use it below 20. So I won't do the same thing for the short entry filter. It works the exact same way as the long entry filter, except for the shorts. The RSI, stochastics, and EMA works the same. You would just need to tweak your settings. And then last but not least, we do have the long and short exit filters. So if you're in a trade and you don't want to exit if the RSI is above 95 on a 100 time frame, 100 look back period, you can filter it like that. Same thing with your stochastics. And same thing for your short exit filters. You can not exit on certain conditions based on what you set for your RSI and stochastics. So there you go. It's a very robust, powerful trading system you can use. That was just the whole moving average. We haven't even went into the rate of change, Connor's RSI or market regime cross. Nor did we in this video go into detail on the market regime, which we didn't even use in here to have even better filtration. But we do have that in a different video. But this should give you a basic overview and example of how to use the whole moving average within the ultimate trend following strategy. Thank you.